Hello everyone, welcome to JIB CIB Prep. In today's video, we're going to discuss about unit number 15, ancillary services. In this particular unit, we'll understand about remittances, different mode of remittances like demand draft, banker checks, NEFT, RTGS. We'll learn about safe locker deposits and different kind of services like custodial service, PMS, merchant banking, government business. We'll check your progress and do some practice questions. So let's begin our video. So remittance, what is a remittance? It simply means transferring money from one bank branch to another, either within the same bank or to a different bank. For example, you are in Delhi and you want to send 10,000 rupees to a friend's account in Mumbai. Now, what you will do? You will use a remittance method. So there are different remittances method like demand draft, mail transfer, telegraphic transfer, NEFT, RTGS, MT and TT, mail transfer and telegraphic transfer, they are now outdated. Electronic modes have made them redundant. So you can use different ways. Say you want to send the money within the same city. So you can say use banker check, else you can use DD, MT, TT, NEFT, RTGS. So bank charges service fees for these remittances. And with the arrival of core banking, fintech apps like PhonePe, Google Pay, and online transfers, MT and TT are now almost never used. Before understanding about demand draft and banker checks, let's quickly understand how does a customer make a remittance. So you need to fill a bank application form and mention mode of remittance, name and address of the person you are sending money to. The person who is receiving the money is known as beneficiary. So in this unit, whenever we say beneficiary, he or she is the person who receives the money. Now, amount to be sent. Now, beneficiary's bank name and account number needs to be given. And what is your name, your address, and your account details. Now, you give all this information and then you do remittance. Remittance means sending money. Now, let's move forward to demand draft and banker check. So, what is a demand draft? A demand draft is a kind of order from one bank branch to another to pay a fixed amount to someone. For example, if you're applying for a college in another city, they may ask you for fees to be sent through a DD. Now, it is not a check, but for the purpose of law, for Negotiable Instruments Act, it is treated like a check, though it is not a check. And it cannot be made payable to bearer. Bearer meaning to say, if you handed over the DD, anyone can encash it. So this will amount to currency, and that's why a demand draft cannot be made payable to a bearer, as that would make it like a currency, which is not allowed under RBI Act Section 31. Banker check. What is a banker check? So a banker check is used for local payments only, meaning within the same city. If a bank wants to pay to a contractor for office repairs, it may issue a banker check. And when can a banker check be used? So at the request of customer, or to pay money from a deceased person's account to legal heir, to pay local bills or contractors for local statutory dues like electricity bill, or for all other local check payments, banker check can be used. But there are some important rules like if amount is 50,000 or more, then it must be paid through a bank and not in cash. If the amount is 20,000 or more, it must be issued as account pay and paid only into a bank account and not in cash. And from September 15, 2018, purchaser's name must be printed on the demand draft or banker check. It has the same validity as a check, that is 3 months, and it can be revalidated but only once, for once, and that too within a year. So demand draft can be revalidated but only for once, and that too within 1 year, and after 1 year it is cancelled. Now, what about cancellation and refund? So refund is given only if original DD or banker's check is returned unused and with no signs of endorsement. The customer must also prove their identity. In case of loss of DD or banker's check, a duplicate can be issued if it is lost and payment has not been made. Purchaser or beneficiary must give an indemnity. So indemnity is that I will save you from the loss, and bank must issue the duplicate within 15 days. If delayed, bank must pay interest for the extra time taken, and kindly note that no interest is paid if the request is made by the third party holder. Alright. Mail transfer and telegraphic transfer. So earlier you can send money from one bank branch to another via post, which is called as mail transfer. So if a person in Chennai wanted to send money to his son's bank account in Delhi, he could request a mail transfer. The money would be directly credited to the beneficiary's account and it will generally take about 7 days. But again, this is now obsolete. So we'll understanding it for just for the sake of understanding. TT was similar to MT, but the message was sent through Telegram. It is quicker than MT, but again, it takes somewhere around 2 days. And these two methods are no longer used. So these two are no longer used. NEFT, National Electronic Fund Transfer System. It is an electronic system started by RBI in November 2005. It allows people to send money from one bank account to another anywhere in India safely and quickly. Now, it works in batches and not instantly. If you send money using NEFT, it is processed in the next available time. So, there are 48 batches in a day, half an hour batch. So, money is transferred into batches. All payment in that slot are settled together in what it is called as a deferred net payment system. So, DNS, deferred net settlement system, is used for suppose you want to transfer 5,000 rupees through NEFT at 2:15 p.m. So the transaction will include the next batch, say 2:30 p.m. and process then. The beneficiary will get the money within few hours. Now, one thing you need to understand is that there is no minimum or maximum limit on the transfers. Each bank branch that supports NEFT has a unique IFSC code. IFSC is Indian Financial System Code, and uh, you can also send money using NEFT from India to Nepal using Indo-Nepal remittance. Remember it. So it is the NEFT payment system which supports Indo-Nepal remittance scheme. What are its benefits? So it is fully automated and easy to use. It is safe, secure fund transfer. There are no courier or paperwork needed. Easy refund if money is not credited. It is quite useful for regular payments like bills, EMIs. Again, bank charges are very low. Money reaches within a few hours and you get the confirmation when the money is sent. RTGS, real time gross settlement system. It is also an electronic fund transfer system, but it works in real time on a gross basis, unlike NEFT. This means the money is transferred immediately. Each transaction is settled one by one without combining with others. So, NEFT use DNS, deferred net settlement. RTGS uses gross settlement system. One key point is here the minimum amount is 2 lakh rupees, no upper capping, but there is a minimum transaction amount to use RTGS facility. So, which is 2 lakh. RTGS is available 24 into 7, all days, all hours. And you need some information before doing RTGS, like the amount to be sent, your account number, beneficiary's bank name, branch, IFSC code, beneficiary's name, and beneficiary account number. Now, RTGS credits money based only on account number and not on name. So, make sure you enter the correct account number. What are its benefits? Very safe and secure, available 24/7. It is fastest way to transfer large sum of money. It can be done online or through branches and it is real time processing. There is no waiting time and fund must reach to the beneficiary's account within 30 minutes and no later than that. Electronic benefit transfer. So EBT is a system used by the central and state governments to send money directly to the bank account of people who gets benefit from schemes like social security scheme, rural employment schemes, old age pension schemes, insurance scheme for the poor. And why EBT? Why electronic benefit transfer? To avoid delays and remove the middlemen, to make sure money reaches the right person and to support financial inclusion, that is bringing everyone into the banking system. How does it works? So EBT started under the idea of one district, one bank, now called direct benefit transfer, and the government selects one bank as the leader in each district, and this leader bank works with other banks in that district to make sure everyone gets the money. Now let's understand the steps involved in EBT. So the state government deals with one leader bank per district. That leader bank signs contract with other banks for sharing the work. Now, the nodal department of the state gives list of the people who will receive the money. Other banks open accounts for those people and give them smart cards using business correspondents. The government send money to the leader bank and leader bank send this money to other banks, and those banks credit the money to the people's account. So it is like this: state government send money to the leader bank send money to other banks, and these banks send money to the people's account. Now, all this happens on the same day, and people can also get services like deposit accounts, small loans, remittances, and credit for farming, Kisan credit card. Now, what are the key important initiative or measures? So, open bank account for all beneficiaries and link Aadhaar. Set up a DBT coordination committee in each district. Show the names of the business correspondents on state level bankers committee website and village wise. Each bank must set up a grievance redressal system and appoint officers to resolve Aadhaar related issues. Public sector banks again uses Aadhaar payment bridge system, and banks are installing ATMs in rural banks, issuing debit cards and appointing business correspondents in places where banking was not available. Now let's understand about safe deposit lockers. A safe deposit locker is a secure storage space that a bank provides to its customers so that they can safely store valuable items like jewelry, property papers, or other important documents. And to use this locker, the customer pays a fixed rental fees per year, and that determines the relationship between bank and the customer. So there are two relationships. When the locker is given on rent, the relationship is that of lessor and lessee. And when the customer puts item for safekeeping, then the relationship between the bank and the customer is that of bailee and bailer. So there are two relationships, lessor and lessee. It is like landlord and tenant. So the customer uses your locker, gives a premium or a rent in for using the locker facility, and when item is uh, given for safe custody, when it is put in the locker, then the relationship is that of bailer and bailee. The customer is the bailer and bank is the bailee. Now, how does it work? So each locker has two keys. One key is with the customer, also known as the hirer, and the other is a master key, which lies with the bank officer in charge of the lockers. And to open the locker, first the bank officer uses the master key, then the customer uses their own key. To lock the locker again, the customer key alone is enough, but for opening, both the keys are required. And who can get a locker? So individuals can get a locker, companies, partnerships, trust, societies, associations can get a locker. Individuals singly or jointly can avail locker facility, but kindly note that minor cannot use the locker facility. Locker cannot be issued in the name of minors. So even businesses like diamond traders uses lockers to keep their stock safe, and in some cases multiple parties may rent a locker to share or uh, to store a shared item like devices that contain confidential software codes. Hiring out a locker. So RBI issued guidelines in 2021 to make locker operations safer and more transparent and customer friendly. While hiring out a locker, before giving a locker, the bank check the customer's KYC details. So KYC and customer due diligence needs to be done before the allocation. Their photographs of the locker hirer and the person allowed to operate the locker must be taken. A clear agreement must be signed saying no illegal or hazardous item will be kept inside. If the bank suspects any illegal use, it can take all the necessary actions which are required. When lockers are allocated, banks should keep a list of available lockers and a waiting list, and the process of allotting locker, it must be transparent. Banks should follow the model locker agreement created by IBA as per Supreme Court guidelines in the case of Amitabh Dasgupta versus United Bank of India. And the terms of the agreement should be fair and not too harsh for the customer. Locker rent varies. Locker comes in different sizes like small, medium, large, and with rent charges in advance. If the rent is not paid on time, the bank may charge a penalty. And if rent is overdue despite notice, the bank can break open the locker and recover its dues from the content. And if the locker is surrendered early, the bank must refund the unused rent. The term deposit as security, as a safety measure, banks may ask for a fixed deposit equal to 3 years rent plus locker breaking charges. But this is not compulsory for old customers or those with well managed accounts. And bank cannot force customer to open FDs unnecessarily. Keep that in mind. Infrastructure and security. So lockers are kept in a vault with strong protection. Entry and exit points are covered with CCTV and recordings are kept at least for 180 days. If someone complains about unauthorized access or theft, the CCTV footage must be kept until police investigation is completed. The locker room should be protected from flood and fire, and lockers should follow BIS standards. Mechanical lockers require both keys, and electronic lockers must follow RBI cybersecurity rules and a keep for permanent lock of activities. The all locker keys should be marked. All the keys must have the bank branch code for identification, and the bank should regularly check that the keys are safe and working. Locker operations. So only the locker holder or a person authorized by them can operate the locker. Each entry is recorded in an access register with the date, time in, timeout, and signature. No bank officer or other locker holder is allowed to stay inside the locker room when someone is opening the locker. And every time a locker is operated, a SMS and email must be sent to the customer mentioning the date and time. Also, when a locker is given up, when it is surrendered, the locks must be changed and keys of empty lockers are kept in a sealed cover. Duplicate master keys are kept safely in another branch and proper record should be maintained. There should be end of day checks. So bank officer checks whether all lockers are closed properly. If a locker is open, it is sealed immediately and the customer is informed. And the room is also checked to ensure no one is left inside and no item is lying outside. And all details of locker usage and key management are maintained in bank software, that CBS systems. Nomination and death claims. So if a locker is operated, earlier only single nomination was allowed, but with recent changes, up to 4 nominees can be appointed, but on successive nomination basis, that is priority basis. We have already discussed it. We are not discussing it in detail now. And if a locker is operated jointly by two or more, then again nominations can be up to 4. Earlier, there was a single nomination, and for jointly there can be more than one person. The bank must take nominee's photograph if the customer agrees, and if the customer signs with a thumb impression, two witnesses are required to attach the nomination form. So if the customer provides thumb impression, two witnesses are required for the two witnesses are required to attach the nomination form. And the bank must give an acknowledgement when a nomination is made or cancelled. Now, what about death claims? So, bank must follow IBS model policy for settling claims. The death certificate of the locker holder and identity proof of the nominee are usually sufficient. Bank should not ask for succession certificate, court order, indemnity bond. So, bank should not unnecessarily harass the nominees, and the claim must be settled within 15 days. Keep that in mind. It is quite important from the exam point of view. So the claim must be settled within 15 days from the date of the claim is received. And there can be different situations. Let's discuss them. So what if a sole locker holder dies? In that case, nominee is given access after verification and an inventory is made. If it is a joint locker and one dies, so the surviving holding member plus nominee are allowed to open the locker after inventory is made. If the joint locker with either or survivor clause and one person dies, in that case bank follows the instruction already given. And if there is no nominee or no clear instruction, in that case bank may allow legal heirs to access locker based on proper documentation and bank policy. But a few caution has to be maintained by bank. That is, the bank must verify the identity of the nominee or legal heir. Bank must confirm the death via documents. Bank should ensure that there is no court case or order is pending and the information that exists, and it informed that the excess is only as trustee. The nominee is not the owner but only act as a trustee. Closure and discharge of locker items. So, there can be multiple reasons when lockers can be broken open. For example, a customer loses the locker key and requests break open. If the government agencies get a court order to seize the locker, if the customer does not follow the terms, not paying rent, not cooperating, so there's a break open process. If the customer loses key, so locker opened only after customer is identified, gives written request, and is present with the bank staff. If there's a law enforcement seizure, in that case, bank must ensure the order is genuine and inventory is made in the presence of government officers and two witnesses and a bank officer. Video recording is to be done and copy of inventory is sent to the customer. If there is non-payment of rent for 3 years, bank gives notice and then public notice in two newspapers. Locker broken in presence of two witnesses and bank officers, and the contents are to be recorded, stored in sealed covers, and not opened by bank unless legally allowed. If the locker is inactive for 7 years, even if the rent is paid, if the hirer is untraceable, contents may be transferred to nominee or legal heirs or disposed after following due process. Locker operations rules effective 1st January 2002. So the alert must be given. So customer gets SMS and email each time locker is operated. Must include time, date, and redressal contact for misuse. If the content are lost due to theft, fire, fraud, or building collapse, bank must pay 100 times the annual locker rent. For example, if the locker rent is 2000, the compensation is 2 lakh rupees. Locker safety standards are to be followed. So, new lockers must have BIS safety standards. Electronic lockers must follow RBI's cybersecurity guidelines. Locker keys must carry bank branch code, and banks may allow extra padlocks by customer if possible. Also, banks will not be liable for act of God for natural disasters, but they must take preventive steps. Liability of bank. So bank must have a board approved policy on responsibility for loss of content, safety and functioning of locker, protection from unauthorized access, and prevention of theft, fire, etc. And banks are not liable for natural disasters, but they must take reasonable safety precautions. Custodial services. So a custodian bank is like a caretaker of your financial assets. People or companies often invest in shares, bonds, and other securities. These investments need to be stored safely so they are not lost, damaged, or stolen. That's where the custodian banks come in. It safely keeps these assets either in physical form like paper certificates or in electronic forms like demat accounts. Now, the key services provided by the custodian banks are settlement, safekeeping, and reporting. Settlement, making sure that when you buy or sell a security, the exchange of money and securities is done properly. Safekeeping, safely holding the securities, and reporting, mean to say giving regular updates and statements about your holding. So, these services are offered to wide range of clients like mutual funds, insurance companies, corporates, investment managers, trust, endowments, or high net worth individuals. Portfolio management services. So, portfolio means a basket of investment, usually a mix of debt like bond and equity. Debt gives fixed interest income, while equity gives dividend and a chance for value to grow over time. Portfolio management means managing this basket in a way that gives the best return while keeping risk low and ensuring liquidity, that is, easy access to cash. So there are some key principles, basic principles, that is, we focus on portfolio and not individual security. So one share going up or down is less important than how the entire portfolio performs. High return comes with high risk. To earn more, you need to take higher the risk. This depends on timing. So when you plan to withdraw your investment, it matters. Diversification reduces the risk. It helps. Investing in different type of assets reduces the risk. Customized approach should be there, so each person portfolio should suit their goal, income, and tax situation. It is a very competitive market, so many experts try to beat the benchmark, so the prices adjust quickly to new information. Again, RBI has also given guidelines on PMS. So investments are at customers own risk, no return is guaranteed. Minimum investment period should be 1 year. Fund must be invested at market rates. No favors. Funds should not be given to other banks to manage. Bank charges a clear fees. It does not depend on the returns. Funds to be invested only in capital market instrument and not in loans or money market. All transactions should be transparent and recorded properly. And if there is any fund lying idle, then CRR or SLR requirement must be followed. Merchant banking. Merchant banking mainly means helping companies raise money from the market. These bank manages new share issues, arrange loans, and give advice to companies about finance and fundraising. So, a company, for example, company wants to raise 100 crore through IPO. So, merchant bank helps in valuing the company, filing documents, finding investors, and managing the entire issue process. So, merchant banks must registered with SEBI as Category 1 merchant bankers to do with this merchant banking. And they can also do loan syndication, arranging a group of lenders, payment of interest, dividend warrants, or to bridge loans to temporary finance before full funding. Government business. In India, many financial transactions of the government, like tax collection or pension payments, are handled by selected banks. And these banks are called agents of the RBI. So, approval is required from CGA, from State Finance Department, from RBI itself. So, public sector banks and private banks are allowed to do government business. Example of government business like collecting income tax, customs, GST, opening and maintaining PPF accounts, handling treasury accounts and railway revenues, managing pension payments to retired government employees, issuing and accepting application for relief bonds or saving bonds, levying of service charge. So banks can fix service charge on their own, but again they must follow certain guidelines. So while charging, a bank must ensure that the charges are reasonable and reflects actual cost. People with low activity in their account are not to be penalized, and all charges must be approved by the bank's board. Now, there are RBI norms for reasonable charges. So, our basic banking services must be low cost, especially for rural people, for pensioners, and for senior citizens. Even if the service is part of the bundle project, like our premium savings account, basic services should be made available separately at reasonable cost. Charges must be lower for individuals than for companies. They should be more relaxed for vulnerable categories, justified and communicated clearly in advance. Banks must disclose charges through notices, through websites, through newspapers, through customer welcome kits, and any change, a notice of 30 days prior should be provided to the customer before there's any increase in the charges. So RBI has prescribed ceiling for the charges that can be levied by the banks for RTGS and NEFT transactions. So for transaction of 2 lakhs to 5 lakh, RTGS maximum charge can be 24.50 paisa plus applicable GST, and above 5 lakhs, it should not go beyond 49.50 paisa plus applicable GST. For NEFT up to 10,000 it is 2.5 rupees plus GST. For 10,000 to 1 lakh it is 5 rupees. For 1 lakh to 2 lakh it is 15, and above 2 lakh it is 25 rupees plus applicable GST charges. It is for outward transactions and no charges must be levied on inward RTGS or NEFT transactions. Now let's check your progress. A demand draft is issued by the bank to be valid for, it is valid for 3 months. So option C is the correct answer for this question. Just a moment. Yeah. A customer is entitled to issuance of a duplicate DD in place of the lost fund, provided he gives due intimation to the issuing branch, payment of DD not already made by the drawing branch, execution of an indemnity signed by both the payee and the purchaser of DD, payment of a fee as applicable for issue of such duplicate DD. So all of this has to be done. So that's why option E, all of the above, is the correct answer for this question. One of the following statement is not true with regard to a locker facility in the bank. In case of a sole hirer of a safety locker, nomination can be made in favor of only one individual. So the statement was true in the given context. Uh, the change in nominee was effective recently. So here the statement is correct. A locker cannot be hired by a limited company specified as a locker can be hired by a company, so that's why this statement is not true, making option B as the correct answer. One of the following statement is not true with respect to RTGS. Funds are transferable from the branch of one bank to the branch of another bank. Only the corporate and government department can avail this facility, so this statement is uh, not correct. You as individual can also use RTGS facility, making option B as the correct answer for this question. Implementation of EBT scheme is meant for which of the following type of customer? Pensioner only. So pensioners yes, but pensioners only no. High net individuals no. Low value accounts yes. So C is the correct answer for this question. Uh, Now let's move on to our practice questions. Consider the following statement regarding the operational and regulatory aspect of DD and BC. A demand draft, although not check, is treated as one under Negotiable Instrument Act for limited protection. This statement is correct. DD and BC with a face value of 20,000 and above must not be issued with an account pay crossing, but also must not be paid in cash. So this statement is incorrect here. So above must not okay. DD and BC with a face value and above must not only be issued with an account pay. So this statement is actually correct. Crossing but also must not be paid in cash. So this statement is correct. It is saying that it should be issued with an account pay and it should not be issued in cash. Okay, so this statement is also correct. The name of the purchaser must be printed on the face of all demand draft, banker check and pay order, irrespective of the amount, effective from September 15, 2018. Yes, this statement is also correct. A demand draft fund expired after 3 months cannot be revalidated under any circumstance. No, it can be revalidated once within 1 year. So this statement is not correct. Interest on delay in issuance of demand draft is payable even if the request is made by third party holder. So this statement is not correct. Option C, statement 1, 2 and 3 are correct. Consider the following statements regarding NEFT. NEFT are settled individual in real time. No, it is RTGS, making this statement incorrect. Each NEFT participating bank branch is assigned a unique IFSC code. Yes, this statement is correct. NEFT facilitates one-way transfer from India to Nepal under Indo-Nepal Remittance Facility Scheme. Yes, this statement is also correct. So, option B, statement 2 and 3 is correct answer for this question. Consider the following statement about RTGS. RTGS enables real-time settlement of funds on an individual transaction basis without netting. Yes, this statement is correct. The credit to the beneficiary account is delayed if the name does not match the account number. So this statement is not correct. The transfer is to be made on account number and not with the name. RTGS is operational 24 into 7 into 365, allowing instantaneous high value fund transfers at any time. So this statement is also correct. In RTGS, sender to receiver information is optional and generally ignored during processing. So sender to information is mandatory. Sender to receiver information is mandatory and not optional. So this statement also is not correct. RTGS requires IFSC code of the beneficiary bank branch for successful processing. Again, this statement is correct. So 1, 3 and 5 are correct, making option D as the correct answer for this question. Examine the following statement regarding EBT scheme and identify which of them are correct. The one district many bank one leader model under EBT eliminates the need for coordination between the leader bank and participating bank. So this actually enables the coordination, not eliminates it. So this statement is not correct. Under the EBT system, the funds are routed through savings account maintained by state government and RBI and directly credited to beneficiary. No, funds are routed through the nodal department in Leader Bank. Leader Bank then sends it to other banks, which send it to People's Bank, the beneficiaries. So the statement also not correct. Leader banks are designated in consultation with SLBC and RBI's regional office, ensuring district specific operational efficiency. This statement is correct. Participating banks under EBT are permitted to offer beneficiaries financial products like OD, linked recurring deposits, and general credit cards. So this statement is also correct. The Aadhaar payment bridge Why NPCI is critical for routing benefits based on Aadhaar number and ensures interoperability across banks. So this statement is also correct. Complaint redressal officers under EBT framework handle issues relating to Aadhaar seeding, but not matters related to delayed credit or fraud. So they also handles issued with related to delayed credit or fraud. That's why the statement is not correct. Bank business correspondents deployed under EBT serves only as cash delivery agents and are not involved in account opening or beneficiary enrollment process. So this statement is not correct. So statement 3, 4 and 5 are correct, making option A as the correct answer for this question. Consider the following statements regarding safe deposit lockers as per RBI's revised guidelines. Lockers can be allocated to minor, no, not correct. Lockers have dual control and requires both the bank's master key and customer's key to open, yes. To open it requires both the keys. Bank may insist on a term deposit for new locker hires to cover rent and break open charges, yes. Bank can. The model locker agreement must comply with Supreme Court rulings in Amitabh Das Gupta versus United Bank of India case. Yes, this statement is also correct. In case of locker surrender, proportionate advance rent is not refunded by the bank. It is actually refunded. So option statement 2, 3 and 4 are correct. 2, 3 and 4 option A. So option A is the correct answer for this question. Which of the following statements are correct with reference to operation and security of safe deposit lockers? If a locker is found left open after operation, it must be sealed and the hirer informed only by post. Hirer can be informed by SMS, email, not only by post. So this statement is not correct. Electronically accessed lockers must maintain an unalterable log of locker activity. Yes, the statement is correct. Privacy of locker hires must be ensured and no bank official is allowed inside the locker room when the customer is operating the locker. Absolutely correct. The ingress and egress of bank staff to the vault room need not to be recorded. Only the customer access is recorded. No, for bank staff also it is recorded. So this statement is not correct. Locker register and locker key register must be mandatorily maintained in CBS or an approved software system. Yes, this statement is correct. The locker room should ideally have multiple, no, should not have multiple entry or exit points. So this statement is not correct. So 2, 3 and 5 are correct. Option C is the correct answer for this question. Identify which of the following statement regarding settlement of claim in case of death of a locker hire are correct. Bank must release the content of a locker within a maximum of 15 days from the date of receipt of the claim. Yes, correct. In case of sole locker hire, the nominee may be granted access to the locker after verifying the death certificate and their identity. Yes, correct. If only if one of the joint locker hires with nominee registered dies, only the nominee is allowed access to the locker. No, the survivor and the nominees are allowed. So this statement is not good. If there is no clear survivorship clause or nominee, bank may allow access to legal heirs based on their policy and with due caution. Yes, this statement is correct. Bank must always insist on succession certificate or letter of administration before giving access to the locker. This is actually not correct. So 1, 2 and 4 are correct, making option A as the correct answer for this question. Which of the following statements are correct with respect to operation, closure and liability related to safe deposit locker? Bank can break open a locker if the locker rent remains unpaid for 5 consecutive, it is actually 3, not 5. So this statement is not correct. Bank must video record the break open process and preserve the footage for future reference wherever legally permissible. This statement is absolutely correct. In case of loss due to natural calamities, banks are fully liable. No, in case of natural calamities, banks are not liable. So this statement is not correct. Customers must be notified via SMS and email each time their locker is accessed with redressal mechanism for unauthorized access. So this statement is actually correct. In case of electronic lockers, banks must maintain a complete audit trail and assign the vault administrator password to a senior official. So this statement is correct. So 2, 4 and 5 are correct, making option C as the correct answer for this question. Identify the correct statements for the from the following about custodial and portfolio management services. Custodian banks primarily serve retail customers like individual investors and credit card holders. No, they serve institutional clients like mutual funds, insurance companies. So this statement is not correct. In portfolio management, the risk of a security is evaluated based on its standalone risk, independent of the portfolio. Again, not correct. Diversification within a portfolio reduces the overall risk by spreading investment across assets. Correct. Portfolio strategies must consider investor specific factors like tax rates, transaction cost, risk appetite. Also correct. In PMS, transaction must be booked at pre-agreed fixed prices to reduce uncertainty. So PMS transactions must be booked at market rates and not pre-agreed fixed prices. So this statement is not correct. Bank must maintain CRR or SLR on undeployed funds under PMS. Correct. So this statement is also correct. So 3, 4 and 6 are correct, making option A as the correct answer for this question. Which of the following statements regarding the levying of service charge and NEFT RTGS charges by banks is or are correct? So banks can fix service charges without any approval from the board of directors as long as the charges are reasonable. No, they require the approval from board of directors. So this statement is not correct. Basic banking services for individuals must be priced higher for individuals in rural areas compared to urban areas. Absolutely not correct, because charges for individuals in rural areas should be more liberal and not higher. So not correct. RTGS charges for transactions between 2 lakhs to 5 lakhs can be levied up to 49.50 plus applicable taxes. So this statement again is not correct because it is capped at 24.50 paisa and not 49.5. For 5 lakhs and above, it is 49.5. That's why this statement is not correct. Inward RTGS or NEFT transactions can be charged a fee by bank as long as the fee is not excessive. So inward transactions cannot be charged. So again, this statement is not correct. Bank must ensure that charges for basic banking services are lower for individuals than non-individuals, and these charges should be disclosed upfront. Absolutely correct. The maximum charge for NEFT transaction of 15,000 is 25 plus applicable GST. So for transactions above 1 lakh, then the charges are applicable this much. So this statement is not correct. Changes in service charges must be communicated to customer at least 30 days prior to implementation, with the option for the customers to exit the relationship within 30 days of notice. Absolutely correct. So here statement 5 and 7 are correct. So 5 and 7 should be there. So no option is there. So it should be 5 and 7. 3 is not correct. 1 again is also not correct. So statement 5 and 7 are correct. Uh, Here statement 1 stating as incorrect as RTGS charges. So this is actually incorrect and not correct. This is incorrect. So the reasoning provided is correct, but here it is mentioned as correct, but it is not correct. 5 and 7 are correct. So there is a change in option. A typographical error should was there. So thank you for watching this session. If you have any doubts, do ask us on our Telegram group channel, JIB Prep. We'll meet again with unit number 16. Thank you for watching this session.